So good afternoon, everybody. My name is Alexander Steiner. We will just wait 1 or 2 minutes longer to everybody join this webinar. Okay, Campus, I think we can start now. It's 3 minutes past 5.
Sure, I will just make a short intro, if that is okay. Alex?
With pleasure.
Yes, so hi everyone. Hi to all the participants, to the investors out there. I'm very glad to kick off this webinar together with Doorway, an investors platform network from Italy that is now moving forward to Austria and the GSA region. It's the first kind of its webinar we're conducting together. Alexander Steiner, I think a lot of you know already from his past at the Austria Research Service here in Austria. He's now active in Doorway. And today you will hear a lot about Doorway, its concept. You will hear some of the startups they have as well, because they could be interesting for you as investors as well. And I don't want to make it too long, because later on we will also have some kind of discussion between Alex and me regarding venture capital, angel investing overall. So yeah, looking forward to this. Thank you that you're participating. I'm not sure if there will be questions. You will also try to respond to them as well later on, but I think this is something you can explain, Alex, later as well. So yeah, that's from my side.
Campus, for the introduction. From my side, also a very warm welcome to everybody here in this webinar. My name is Alexander Steiner. As Campus mentioned, I'm an investment manager at Doorway. I've went through the registration list, and I'm very happy to see so many familiar names on it. So great to have you all here. We chose today to speak in English and to make this webinar in English, as our international startups will be pitching in English. And we also have a few English-speaking investors in the audience. So that's why we chose to speak English and not German, although I am Austrian and we worked in Austria in the past, as Campus mentioned. So let us start, and what you will see today is a little overview of us. So we are new to Austria, and we would like to introduce ourselves with the highlight of today, which will be 2 startups pitches. We want to showcase you 2 exciting investment opportunities from Europe, but also from the US, in the world of generative AI that we are currently fundraising for. The first one is Contents, which will be pitched by Stefano. It is a growth startup making next generation content creation for generative AI. Thank you, Stefano, for being here. I will let you pitch in a few minutes. The second one is Fantix, which will be presented not by Fabio, but by Daniel. Unfortunately, Fabio has a personal inavailability with its because of one of his child has got sick. So we're very happy that Daniel is taking over and is going to pitch today to you. Fantix is a generative AI data tool for business intelligence, which creates simulated data. And this might help us in making data collection less important, but I won't talk too much about it. Pitches will be 7 minutes long, and you have the possibility to ask questions in the chat or Q&A function. So you see the little tab. We all know it very well by now. But before and after the pitches, of course, as Campus mentioned, we're going to have a short discussion about scale-up investments. And before we get into the startup pitches, let me give you a few words about Doorway and introduce ourselves. So, as we are all gathered here today because we understand the importance of innovation, entrepreneurship, venture capital for our economies. Most of us here today will be already having a portfolio of investments. Venture capital investments have an impact, supports innovation. Together with entrepreneurs, we are developing the companies of tomorrow. as well as the technological applications that will define how people work, live, interact, enjoy themselves, and so on. And here in Austria, as you can see in this graph, which is the European Innovation Leaders scoreboard from the European Commission, we are among the strong innovators of Europe and thus of the world. Austria is even the leader of the strong innovators category, just before Germany and France. But the report also shows that there is one strong weakness in Austria, and this is missing capital for startups and innovation. We are missing capital. However, VC investments have outperformed the main investment categories in recent years. A study of deal flow indicates that return in venture capital is 15% compared to 12% in private equity or 10% in the S&P 500. In Europe, venture capital even outperformed US results. Following Invest Europe, the European Venture Capital Trade Association, the 10 years leading to 2022 saw European VCs net annual returns hit 23% compared to 21% in the US. So we have an asset class which is important, which has an impact, returns a good yield. And we have a lot of investors that seek to diversify their investments. It is something that is on the mind of every investor, as we want to spread risks and thus diversify. VC investments are risky, but also studies have shown that while investing into startups in a diversified approach, we can create a better yield and better output. So we have an asset class which is which is bringing impact and it has an interesting yield, but these opportunities are restricted, especially when looking at the most interesting deals. Deals where founders can choose their investors, those that are the most promising. It becomes nearly impossible as a single individual to get access to these deals. And this is our mission. We are here to provide pre-vetted venture capital opportunities to retail and professional investors and take away the pain of sourcing investment management as well as reports. We have built an investment platform for you where you can invest to these carefully selected investment opportunities. Opportunities that are screened by a team of analysts and investment managers like me, validated by industry experts and an investment committee of seasoned investment professionals. We are lowering the difficulty of access even further and allow you to invest from 5,000 euros on with our club deal mode of investment. This gives you the opportunity to build a diversified portfolio. We have now a community of over 2,200 investors that trust us, and about 50% of these have already invested with us. A large part of them are recurring investors. We strongly engage with them via events, via education, and our own community platform, and have done 39 startup investments, mobilized 28 million euros in the past 5 years. Additionally, as briefly mentioned, Norway provides you another advantage of Norway is that we take care of the whole investment process. You don't need to engage with every LinkedIn message of founders knocking on doors or lose time in getting quarterly reports. We will do this for you. Our investment phase is focused on late seed and up to Series B startups. We're focusing on this phase as they allow for us an optimized risk and return ratio. These scale-ups have already succeeded in the Valley of Death, have proven their product market fit with attraction, and are now on the path towards international expansion and growth. Our main region that we are sourcing is Europe, and we also consider US-based investments if they have some connection to Europe and a strong co-investor. Our portfolio is well diversified. We have gained, it has gained quite some value since investment, and we have startups from the US, from Italy, from Spain, from Portugal, France, Switzerland, and many more to come. We've also generated 2 exits already for our investors. Our investments are structured in campaigns, which usually take between 30 and 60 days. For every campaign, physical and digital events are made, and where you can get to know founders and interact with them. We also want to be a partner in your investment activities. Thus, our team of investment managers is here to guide you in the different investment cases and help you in your endeavor to build a portfolio of startups. So if you would like to discuss an investment case, understand the context, market, or competition, or our reasoning behind the investment, you can always reach out to one of our investment managers. Next to Fantix and contents, which you will be hearing today, we also have other campaigns active. One of them is Barbacoa Market. So if you're interested in the food market, I'll invite you to use this QR code on the platform on the screen and get a look at the deal. But that's all from me and from the introduction. Let's get started with our pitches. So the first one that we are presenting today is a very special investment in our portfolio. We like Contents a lot for its team, zeitgeist, and traction. The founding team has gained experience in multiple ventures, generated 4 profitable exits for the investors in the past 10 to 15 years. Contents is a easy to use and very helpful platform for the creation of content. Every marketing team will thank this startup, hopefully in the past. The company is in the zeitgeist and their traction is impressive. The company wrote its first invoice in 2020 and closed last year with multiple million euros of revenue coming in globally. Stefano, the floor is yours.
Thank you, Alexander. So I'll be sharing my screen. You can see it, right?
Yes.
Okay. So first of all, thanks for the opportunity and nice to meet you all. My name is Stefano Romanazzi and I'm currently working as a sales engineer at Contents.com. In July 2022, Bessemer Ventures predicted that the adoption of GenAI would have been even faster than cloud and smartphones, to such an extent that by 2032, 66% of online content would have been generated with such technology. Fast forward to today, March 2024, and the most recent predictions claim that this percentage will reach 90% in just a couple of years. And this is one of the many reasons why we believe GenAI can be considered the next platform shift after what happened with the internet, cloud, and more recently, smartphones. We started working with this revolutionary technology back in 2021, so before all the hype that was brought by ChatGPT onwards. And by looking at the current market scenario, we know that there are still some pretty big obstacles that are hindering companies from fully embracing GenAI. First of all, managing high content volumes is pretty challenging because most of the times the available platforms on the market aren't adequately integrated with the tools that businesses use to manage and distribute content, the CMS. Outputs are average and anonymous. There is kind of like a one-size-fits-all approach. Crafting prompts, the instructions that AI has to elaborate to generate content, is no easy task at all. And this is why there is often a misalignment between the expectations and the actual results. Last but not least, when it comes to dealing with large language models, there is a problem of hallucinations, wrong or incorrect information that may pop up when AI generates content. These are all problems that we've been solving with our modular platform, which is designed to support all kinds of companies throughout the whole content workflow, since we're offering tools to generate written, audio, and graphic content to fulfill the business's marketing purposes. The offering is software as a service, and as of now, we have 2 different versions available. A standard version for the small, medium businesses that are looking for a reliable ally to deal with their daily content creation needs that currently boasts more than 50 templates. And the enterprise version instead is the current focus of the business, and it is addressed towards the larger organizations that are looking for a fully customizable solution. The key features of the enterprise platform are the real-time integration, because we can guarantee the generation of up-to-date content, not only limited to 2021 or 2023. The integration with data sources that belong to the company that we're working with. And this is extremely beneficial because we can reduce the degree of hallucinations. And at the same time, we can use existing pieces of content that have been validated by the company, as well as specific guides about how the company communicates across the different digital channels. And this allows us to shift from a standardized content creation, which is one of the major issues that I've highlighted before, to a personalized content creation, because we can create a true brand voice, making sure that AI can replicate how the brands communicate. Last but not least, when it comes to the enterprise platform, we are also covering very specific use cases that aren't available on the standard one. This is a slide to give you an overview of how the enterprise platform works. So there is a first phase of data collection where we can integrate contextual data or brand elements. Then there is the choice of the large language model. We're agnostic when it comes to dealing with them because we can work with open source models as well as closed source models. It truly depends on the task that we're going to manage. And then everything converges into our orchestration layer where we deal with the activity of prompt engineering, because one of the key USP of our solutions is the no prompt approach, because the inputs that we ask our users are very simple and the results are always consistent. The final result of this, of course, is a fully customizable solution with different number of tools and the connection with the CMS that the company is using to manage and distribute content. We operate in the application layer because we are not developing the technology firsthand, rather using the best available technology on the market, personalizing it based on the needs of our customers, and offering our proprietary tech framework both to the small, medium businesses and the enterprise. The approach inevitably is B2B, and there is a pretty big difference in terms of features, as already highlighted before, as well as in the average ticket value, considering that for the small, medium businesses, we're around $1,000, whereas for the enterprise, $50,000. In both cases, we are talking about recurring revenue, as the contracts are based on fixed monthly fees. And as for the revenue split, right now, the enterprise is generating 80%, whereas the standard 20%. About our traction, we have a current ARR of $10 million. We're physically active in 3 countries, headquartered in Italy, but we also have offices in Spain and France. And we're already planning the new opening of local sales offices around the world. We also have experienced 100% year-over-year growth from 2021 with $2 million, $4 million, and last year we closed at $8.2 million. As for the team, I leave the stage to Salvo.
Okay, thank you, Stefano. We have a very strong and experienced team in content. Let's start from Massimiliano, our founder and CEO. He's an experienced entrepreneur with a proven track record, with a successful history of exiting from 4 companies. For example, in 2012, he sold the OLX Group to Naspers for $80 million. I have a plus 15 years experience in finance and operations departments. And after 2 listed company, I work as a director in Ernst Young before joining companies as CFO and CEO. As you can see here, we have other strong managers in the group, like Valentina, our CMO, or Tommaso, our VP of Global Sales, with a strong experience in SAP, and Google. Okay, in terms of fundraising, we closed recently. We approved recently $18 million Series B in December 2023, and we already raised around $8 million since 2019 with the Series A closed in 2021. In terms of investments, we expect to use this money to drive the next step of the group, and we expect to invest in marketing and sales for the 50% more or less of the money raised, the capital raised, R&D, and for sure other functions to support the growth. Okay, this is the last one. Thank you very much. And
thank you very much.
The floor to Alexander. Okay, thank you, Alexander.
Thank you very much, Stefano and Salvatore. Yes, so content is one of our current investment opportunities, we have seen a considerable interest in this investment with over 37 investors that have invested with us from our community, and we already raised a bit more than 700,000 euros, exceeding our initial funding goal by 7 times. But we can go up to 1 million euros in this round. So we are very happy about this investment and the traction it receives. So if you would like to join this equity investment together with us and co-investors such as Thomas Reuters, as Salvador just mentioned, you can do it by putting in a ticket starting from 5,000 euros. So looking at the question box, I don't see any direct question now for contents. I was thinking, as Campus is one of our seasoned investors as well, do you have any question you might be wanting to know from contents? Campus, are you here?
I'm here, yeah. Don't worry. There is one question, by the way, but regarding Doorway.
Yes, I'll answer it just after.
Yeah, just wanted to know regarding your. Can you tell us a bit more about your expansion plan now? What are going to be the next steps when it comes to expansion?
Salvo, you want to go with this?
Yeah, sure. Okay, in terms of, I mean, expansion, do you mean general growth or geographic expansion?
Geographic expansion in particular, but if there's something you want to mention with the growth in general as well, that could be interesting also.
Yeah, sure. We are already very good market share in Italy, France, and Spain. We just entered Germany and UK with 2 very important clients, and we are gaining market share also in those countries. We are already, let me say, the business leader in Europe, and we expect to complete this position in the next months, and then the goal is to enter the LATAM and North American markets.
And just one thing regarding the expansion, is it always the same approach, or how do you set up this expansion? So is it like through 2-3 bigger clients, or how does it work?
In terms of expansion, we have mainly to strategy. This depends on the market. The first one is the organic expansion, like we are doing in Germany and UK, because the brand is enough known, and we are able to close a deal with very important clients, and this is the first step to enter in a new market. And the other way, maybe the M&A, so acquiring some local companies with a strong team, and then starting from there, gaining market share in the local market. But the good thing is now we have a very well-known brand in Europe, and this obviously facilitates the geographic expansion.
There is one question from the box which just came in. What are the costs for processing the generative AI requests in your last financial year, and what proportion of your revenues does this represent?
All our revenues came from our platform. So we have, as Stefano mentioned, to kind of targets the small business and the enterprise, but all the revenues came from our generative AI technology and platform. And in terms of cost, let me say, in terms of margin, the margin of the technology is above 85%. And this includes not only AI, but also other tech costs, like, for example, hosting and other costs like that.
Thank you very much.
Welcome.
Great. So if there aren't any other further questions coming in, Stefano, Salvador, thank you very much for pitching today. I will quickly just jump in before we go to the second pitch, because we have a question about Doorway, and you were asking about more information about how Doorway works and what is our offer and how we differ from other providers. So what is important for us is that we put a lot of emphasis of sourcing and choosing the investment. So we present investment cases that are vetted by, firstly, a team of analysts which go into depth with the founders. But then we also have an investment committee that stresses the startup into every detail and asks it to basically really goes into a depth when it comes to due diligence. So we put a lot of emphasis on sourcing and choosing the investments. And then our investments are done in a club deal way of operating. So we pool in together, the investors pool in the revenues and create an SPV for this investment, where the investor is then shareholder of the SPV and can invest into the startup. We also have an international orientation, so we're not focused on only one market, but we seek to be a European player and propose deals from all over Europe. And this is something which we consider essential when it comes to diversify startup investments. I hope this answered the question. If not, please feel free to put in a follow-up question. So let's jump into the second pitch. So we are now having Fantix AI, which is one of the tools where collaboration becomes profitable for every participant. In our tech vault, where data is the new oil, Fantix can be seen as the oil maker. Here again, we have an experienced founding team with 2 profitable exits in the past, a team of highly skilled people skilled in big data, AI, analytics, and with established European and American networks. Unfortunately, as Fabio has announced, is unavailable today due to a personal topic. And we are very happy that Daniel is joining us today. So Daniel, the floor is yours. Please give us an insight into Fantix.
Thank you. So hi, everyone. Thank you for having me. My name is Daniel. I am the head of marketing for Fantix. I've been with the team since the very beginning as an advisor, and I joined recently on a full-time basis to help grow the company. When you think about AI, and specifically generative AI, large language models and ChatGPT tend to earn all the glory, and they are the talk of the town. But in order to train ChatGPT and those large language models, what was available to those engineers was a lot of data. It was data on the internet. It was basically free for them to use. Once you move past large language models and you think about artificial intelligence that is needed to innovate in other fields, data is not readily available. It is actually one of the biggest problems in AI-driven innovation, which is that AI is only as good as the amount and the quality of data that you have to train it. In the consumer space, which is where we specialize in consumer analytics, market research. Really, there are only a few companies that have enough data in-house that they can use to train models. They are Amazon, Facebook, Google. You've heard of all of those companies. But in a world in which AI is so critical for innovation, that means that those big, large enterprises are the only businesses that can truly drive innovation. And that is a problem, a huge problem. What we at Fantix have found is that we're actually in a stage where it is possible for businesses to federate their data. That means to collaborate and create an ecosystem, an environment in which artificial intelligence can be trained not on the data of one business in one database, but it can be trained on data that is distributed across hundreds or even thousands of databases. We have the technology to do that. And that is the first important step in what we do. We are first and foremost an infrastructure that allows businesses to collaborate in training artificial intelligence models. There is a second huge trend that is happening today in the field of generative AI. One is the large language models. You've seen it in the presentation before mine, and you've heard all about it. But the other huge trend is the rise of synthetic data. Synthetic data is artificially generated data that is designed to mimic real-world data. And one of the advantages of generating synthetic data is that businesses that don't have enough in-house data to do market research or product research, product testing, or several types of market analytics for their own business and consumer analytics are actually in a position to generate that data using artificial intelligence. According to Gartner, you see this chart on the right, AI today is mostly trained using real-world data, but by the year 2030, most AI will actually be trained on synthetic data. We think that not only will most AI be trained on synthetic data, but we also believe that the majority of market research, academic research, and business analysis will happen using either a data set that is partially synthetic or that is mostly synthetic. In order to take all of this to market, what we've realized is that just providing the infrastructure is not sufficient. There are some businesses, and we already have 2 very large contracts with businesses that are interested in training AI themselves. But what we've realized is that in order to really break through and bring this kind of innovation that we've created to market, we actually need to bring the product to market. So instead of the infrastructure, we have started training models ourselves and taking those models to market. That makes it a lot easier for businesses to enter the world of AI-driven innovation. Instead of having to commit a large team of engineers and massive resources to train a model and not know where that takes them, we're in a position to offer a business AI models that can be integrated in as little as 1 hour. Although in most cases, to be honest, it's about 1 week. All of our models are specific at the moment to consumer intelligence. So to give you some examples, in case you're familiar with these, we are active in the field of CRM data enrichment. So if a company has a database with a list of millions of customers, we can give them additional information about all those customers, and it is not their true information. So it is not privacy protected. It is absolutely confidential. It is synthetic. It's generated by a model that is able to understand the attributes of each user and complete the picture of that customer on behalf of the business using algorithms and probabilistic things that it has learned over time. We're basically a marketplace. Actually, not basically, we are a marketplace. We have a lot of businesses that join our federated model mostly to monetize their data. And we have a lot of businesses that join mostly to acquire artificial intelligence benefits. So generally in order to use or train a model. The way we operate and the way we've been very scalable to date is that those who give us data give it to us on a revenue share basis. We have created an analytics engine that allows us to measure every time a model is used by one of our clients on the buying side. We're able to allocate credits to the data providers whose data was used to train that model. This presentation was made in January, and at that point we were expecting to have annual revenue run rate of about 2.5 million in 2025. We will probably have to revise that to be higher because we will probably get to this number by the end of comfortably before the end of this year, given our current pipeline. As I said, we have strong traction. We have two main fields. I can give you some additional information that is not here because there's been a lot of progress made in the past 3 months. We have two main lines of business right now. We work with large enterprise companies that are ready to train their own data and that are buying infrastructure services from us. They're using our federation in order to train their own models. Those are large contracts that are probably worth about $300,000 to $400,000 each per year. In Q2, we're actually focusing on a second line of business that we had not expected. We're seeing a lot of traction with equity and venture capital funds that are interested in our data, in our models for market research, as well as academia. The pipeline for academia is not as strong, but we're seeing a lot of interest there as well. So we expect before the end of the year to actually be well above the 2.5 million annual revenue run rate. This is again potentially a little bit old. One of the things that we think we're going to be able to do by the end of the year, and we think it will be very beneficial, is to start building a developer community. What we've realized is that 2 of the 3 models that we have that are used to generate synthetic panels, so 100% synthetic data sets that can be used for market research, we can actually service this on a self-provisioning basis. And we think we're basically going to take a strategy of product-led growth and allow this to grow organically that way.
Daniel, I'll need you to get to a point soon.
This is the last slide. Oh, sorry, this is the last slide. Sorry about that. This is the team. The company is headquartered in New York City. Most of the commercial folks that you see here, including me, Lokesh, and Antonio, we're all in the US. And most of the engineers instead are located in all around Italy. So it's mostly an Italian engineering team. I'm done.
Thank you very much. Again, if you have any questions, please put them in the Q&A box. So for Fantix, we are in a late seed round where we have collected already 82,000 euros for this investment with the goal of reaching 100K. Very similar to the results of Fantix, our campaign has been quite accelerating in the last days. So we've collected a lot of investments and we're very happy about the progress. Here we are in a convertible note. It is a safe agreement which will be done with the American entity. And the safe agreement allows you to convert shares at a 20% discount and at the valuation cap of 12.5 million euros of valuation. We have 7 investors that have invested larger tickets, and co-investors in this round are UK-based funds, Connect Ventures and Founders Factory. Again, here, if our investment, you have the possibility to start the investment from 5,000 euros with us. And we don't have any questions right now, but maybe Campus again, do you have anything that you would like to know from Daniel?
Yeah, I got a question. Thank you very much. So because of the market dynamics, you even like increased your goals you want to actually now achieve. Is that, did I get it right? Because
we're thinking of it, yes.
So positive. Mm-hmm.
The presentation you have was made in late December when a lot of this was theoretical. We signed 2 very large contracts in Q1, and those were sort of, we were on track with those 2 contracts. They were not a surprise. It was what we were expecting. What is a little surprising to me, especially, is the fact that we have a very healthy pipeline for some of the new models that we have just released. And we think we're going to get traction with smaller ticket items that are going to have significantly faster sales cycles. I think we're going to be able to sign probably 10 to 15 private equity and market research firms before the end of the year. They're not going to be huge contracts, but they're going to give us a lot of velocity, probably a little bit sooner than originally expected.
Wonderful. Thank you very much, Daniel. If somebody has any questions or would like to discuss Fantix in more details, feel free to reach out to me. I'll put my email address in the chat function. And well, that's it for the pitching part of today's program. Thank you very much, Daniel, Salvador, Stefano.
Thank you
for presenting your
Thank you,
companies.
Alexander. Thank you all.
Thank you as well.
Together with Campus, we'll go now into the second part of today's webinar, where we will hold a little talk about scale-up investments. And yeah, well, thank you, Campus, for the talk today. You know, most of the people here in this room probably know you quite well. You are an entrepreneur, you are an investor, and now head of the startup services and deputy head of the founder service at the Austrian Federal Chamber of Commerce. So you're really a great motivator of the local startup scene, and to have you on board, it's quite I would like to take this advantage and get a feeling from you of how the market dynamics are currently in Austria. So how is the market dynamics for growth startups in particular?
Yeah, so to you, Alex, and to everyone participating. So today was the official presentation of the Austrian Startup Monitor at the Ministry, which is a yearly report on the startup ecosystem in Austria. And it covers like the last year, so 2023. So we have the totally new data today launched. And this time we put a strong emphasis on scale-ups. So within the startups, we have like a let's say a sub part of like startups called scale-ups, which are bigger in terms of like number of employees, the growth rate, the international expansion, and so which are around 14% of all the startups we have. And you have to understand, in Austria we have around 3,150 active startups, and 14% are considered scale-ups. And we compare them, you know, to startups of smaller size and their goals and their achievements and so on. And what was interesting that if you consider all the startups we have in Austria, let's say around 50% have raised venture capital, not more. 50 around 50%, so half of all the startup companies in Austria, which also include scale-ups. But if you just consider scale-ups, which is the next level, let's say, in terms of like growth, then the rate increases dramatically and goes to like 70-80% upwards. And that's why I'm so happy that you also like now expanding to Austria as well, because what we need is more investors from abroad. And I know some investors are also like here in this call who come from abroad, from Germany, Romania, UK, and so on. And that's very important, because this still, if you want to scale, you need a certain amount of capital. We just said to startups, great startups from your portfolio, who have raised an relevant amount of investment capital to actually expand. Apart from that, the ecosystem is growing. The number of new startups is decreasing a bit. That's a setback. But we had a record number of funding rounds overall in the last year. Even though there was a decrease in terms of like the volume, which actually is something that has happened in a lot of countries. The decrease in Austria was around 33%, which, for instance, is still much better than, let's say, the startups in Estonia. or the startups, let's say in Emirates, in Dubai, Abu Dhabi, and so on, which overall is also very a growing ecosystem. Just to give you some comparisons. Yeah, that's just to give you a glimpse what is happening here in Austria.
Great, thank you very much for the insight. Really looking forward to having our first Austrian investment doorway. We don't have any yet, but we've been talking a lot about startups that are raising, so hopefully there will be soon one coming on our platform, so we can provide to the ecosystem as well.
Sure. So I will move forward, you know, from my side. My question to you, if that is okay, Alex.
Sure, with pleasure.
Because I want to make a bit more dive into like Doorway itself as a platform. So can you elaborate a bit more on Doorway position, how it positions itself within the investment ecosystem, particularly when it comes to supporting early stage startups from Europe and the US? I mean, you already mentioned some points, but maybe you can elaborate a bit more. How does Doorway's approach differ from traditional investment players? That's something you already mentioned, but maybe you can elaborate a bit more.
Sure, with pleasure. So, you know, we have our roots in the Italian angel scene. So our founder, Antonella Grasigli, founded Doorway 5 years ago, and she's actually one of the leading Italian business angels that we can find in the market. She has a portfolio of over 25 investments, and also all our shareholders are business angels. So that's really where we are coming from. And we started first as a network of angel investors that kind of invested together, and we slowly developed into this European platform that we are today licensed as a European crowdfunding service operator. However, we kind of try to keep the spirit of our early days, giving investors access to an accessible entry point towards startup opportunities that have been assessed by us and pre-vetted. And investing together with Doorway at the forefront has opened up the business angel opportunities to a new level. Now representing over 2,000 investors that we have on board and having a portfolio of over 39 startups. This has given us a completely different bargaining power and market visibility. We get access to great deals that an individual business angel might not have previously. So as a collective force, we can have better deals and a better visibility. Also, an asset for our startups is our community itself. We try to create collaborations and introduction to relevant individuals. 50% of our investors are C-level executive or founders themselves from Italian and European companies. So there is a lot of possibilities here where we can help our portfolio companies. In essence, our investors can expect with us access to great deals and the possibility to invest broadly in a diversified portfolio. I guess that's quite a point for you as well, no? Then how do you handle diversification as being in your investment activities?
So I've been into like startups and investment, not like into investment for let's say from 2012 on, but overall in the tech and startup ecosystem since 2011, 2012, so over 10 years, 12, 13 years. And the thing is, in the beginning, I made a lot of my investments on my own, and the more I got experience and learn, you know, from my portfolio startups investments, the more I started like appreciating investing with others, because what I see is that a lot of the good opportunities, the good investments comes through the network. That's just to be honest, because it's a networking game. If I have a group of investors, I work with them or I invest with them on a regular basis, there's a trust, you know, there's confidence, and then we actually push each other. You know, I give them deals, they give me deals, and so on and vice versa. That's why it makes sense to work with like investors networks and platforms, because you have this kind of network, maybe even like on a broader scale. And apart from that, if you don't have the experience yet, it's always good to start co-investing with others. But that's what my experience shows me. So the best deals you can get is like through the network.
I fully agree with that.
Okay. So let's get a bit more, talk a bit more about Doorway itself and about your investment criteria, if hope that's okay.
Sure.
So can you tell us a bit more about what criteria Doorway uses to vet and select startups for investment opportunities? You also here you mentioned some parts of an elements of it, but would be good to elaborate on this. How does the process ensure the quality and potential of investments of your community of retail investors?
Sure.
Can you give us more insight on this?
So choosing our startups is our main priority. In essence, we put in a lot of resources and a lot of care into this topic. We even have a designated team of 5 people that deal with this topic, 3 analysts, 2 investment managers, and our process in essence is quite easy to understand. We get access to a few thousand pitch decks a year, as every other investor, but only approximately 500 per year really do get our attention, and out of these 500, 2 to 3% get funded by us. So as you can see, we restrict access to we restrict it quite strongly, and every startup first needs to convince our analysts who dig deep, into all these topics like market, company, competition, but later as well our investment committee. When looking at our companies, we are in a later stage or in an early stage sector. So we start to invest from late seed on and go up to Series B, Series C companies sometimes, as we have with Contents. And with these companies, there is already a lot of data and traction available that we can look at, which is quite different in the very early stages. And so that's a fundamental point. We look for products or services that are validated, that prove a product market fit, and that shows a strong unit economics. So in the presentations, I mentioned the revenue, I mentioned the ARR before introducing the companies, and these are points that we strongly look at. How is the growth of the company? Does the unit economics look good of it, and is it basically on this achievable growth roadmap? The team is an essential point, as it is in every investment. We have presented today 2 founders that are not on the first journey, but have already made first startup successes. Contents had 4 exits done prior to this venture. Fantix has done 2, and the 3rd startup is currently at 35 million euros of revenue. So they are quite experienced, and that is something that we really look forward to and look to find. Another big point is that the startup needs to have a sort of exit strategy that is visible and understandable, and you can kind of follow it. That it makes sense, and that's something we dive deep in. And as mentioned, we also have our investment committee. It is comprised of 10 people, all of them being experts, investment professionals, or managers from classical multinational companies. So, for example, our founder Antonella is on the committee, which brings in a lot of experience with her startup portfolio. We have Madalena, who is an industrial expert with over 30 years of experience. Adriano, a top manager from one of the biggest food retail companies worldwide, or Paola Lanati, who is a health tech expert, and previous startup founder herself. So picking the startup is something we consider crucial for the success of our investors and thus for us. I hope this answered kind of the question, or
It did, yeah.
Awesome. Campus, also you mentioned a little bit about the market dynamics in Austria, but what is your future vision for the startup system? What changes or developments would you like to have in this environment and to have it to foster the startups?
I mean, for sure, several factors still want to have improved, and which we're working on. First, yeah, want to mention getting more international investment and investors to Austria. That's one thing, but also like increase the ratio of like Austrian local investors, you know, into like investing into venture capital. So both ways. You can do this through different like initiatives. You can do it through regulatory tax incentives, for instance, or regulation. If you ease the regulation, or somehow create some kind of tax incentives to invest more into venture capital and startups and tech companies. But that's just one thing. That can be a strong factor, but also, for instance, if you we also want to increase the number of female investors in this area, which is not just about, you know, creating tax incentives, but also like educational programs, initiatives to push this forward. I want to make it even more international. So around 25% of all the startup founders in Austria have some kind of migration background. 1/3 of them are from Germany, the rest are like from other countries. But I want to increase these 2/3 out of this 25%, you know, from all over the world. This number of founders in Austria who have international background. That's something we're working on. There's so much talent, you know. Just think about the international students we have in Austria, which we can convert them into at least to a higher rate into like new company foundations as well. Sure, we want to make founding a company easier, faster, access to capital easier, and we want to like build global networks and push this forward. We have some good networks abroad, but we can increase it, particularly with the emerging hubs that are arising. And I think still in Europe, we are not working as close together as we can. So there's so much potential between the countries and the regions and the ecosystem to collaborate on a higher level. For sure, there's also some kind of competition always, but there's still so much more potential to work together just in Europe alone. And this in combination with like all the emerging hubs that are evolving, that's something where I think Austria can and should position itself, because that's how we need to proceed, because we're a small country. We have good, talented entrepreneurs. We also have good investors, but we need more in both of them. That's what I think. And that's why I'm also like always looking for, you know, new investors also joining and entering the town.
Well, increasing investors is quite a point that you mentioned, which is also one of our focus. And what we hope is with our model of what we have seen in Italy, with our models of club deals, this is actually a tool which helps to bring new investors to the market. Because in our experience, like very similar to public markets, we do not only have active business angels, but we also have passive investors seeking to join startup investments. And you know, our club deal approach allows to combine these vaults and open up this market to new investors. And so these passive investors are not the ones that seek to have a personal connection with the startup, become the strategic advisor, a role that you play with your investments a lot, I suppose. But they want to diversify their investments, and they want somebody who takes care of the boring side, let's say, of investment. And so our hope is really, or what we're actively working on, is to bring in new investors to the market, and I hope we can work on this also in Austria together.
Definitely. And this, I think, was the right kickoff, and now we can continue, you know, working on this together.
Absolutely. I guess we are running out of time as well. So, Campus, thank you so much for being here today. If anybody in this call has any questions, feel free to put it in the Q&A section or shoot me an email afterwards. I'll be reaching out to everybody via email as well to introduce myself and hopefully to meet you then also in a video call or over a coffee in a Viennese coffee house next time I'll be in Vienna. And yeah, that's it from my side. Thank you very much. Thank you, Campus.
Thank you as well, and thank you for the audience for participating.
Then have a good evening.